Hello everyone, it's a pleasure to be here today. Let's talk about an incredibly relevant topic that affects the global economy and your investments. We are facing a series of financial and economic challenges, from economic wars to high inflation and paradigm shifts. Throughout this video, I will share with you valuable and insightful insights on these subjects, as well as strategies to protect and grow your wealth in the midst of this challenging scenario. If you're looking for a deeper understanding and want to make informed financial decisions, I invite you to stay until the end and, if you haven't already, consider subscribing to the channel to receive more valuable content. Let's get started. 5. Economic warfare and implications for the dollar. The United States is imposing sanctions as a form of economic warfare, leading to implications for the dollar. Other countries are also trying to distance themselves from the dollar system, leading to changes in the dynamics of global currencies. Understand, my dear viewer, that we are currently facing a situation of economic warfare. The United States is using sanctions as a tool in this conflict. It may seem like a financial strategy, but the truth is that it has significant implications for our beloved dollar. These sanctions are acting as a form of economic pressure, and as a result, the value of the dollar is subject to unpredictable fluctuations. Furthermore, we are not the only players in this game. Other countries are also trying to distance themselves from the dollar system, which is changing the dynamics of global currencies. History teaches us a great deal about how economic events can shape the financial world. I remember 1971 when I was following the events on the floor of the New York Stock Exchange. At that time, President Nixon announced that we would no longer exchange dollars for gold, leading to a devaluation of the currency that surprised many. Now, look back to 1933, Roosevelt took similar actions, and history repeated itself. So, as market scholars, it is crucial to recognize that history is a valuable guide for understanding current changes. We must not overlook the fact that various types of wars are in play: trade wars, technology wars, geopolitical influence wars, and capital wars. These tensions have implications for our economy and our currencies. As nations become more self-sufficient and nationalistic, globalization may decrease, directly affecting the markets. Therefore, let us remain vigilant about the implications of all this on our investments and financial strategies. History reminds us that all of this has happened many times before. For historical precedents, Dalio refers to historical examples, such as the devaluation of the dollar in 1971 by President Nixon and the currency devaluation in 1933 by Roosevelt, to emphasize the importance of studying history in understanding current events. My friend, history is a ruthless master, but it's also a wise teacher. Just as Ray Dalio aptly pointed out, looking back in time is essential to understand the present. I remember quite vividly the devaluation of the dollar in 1971 when President Nixon announced that we would no longer exchange dollars for gold. That was a shock to many, and the New York Stock Exchange reacted unexpectedly, rising instead of falling. This lesson taught me that market reactions can be unpredictable when faced with significant events like devaluations. And it's not just 1971, if we look even further back, in 1933, President Roosevelt took similar actions, and history repeated itself. Understanding history shows us that these cyclical events have occurred many times before, and that's why we should be students of financial history. It provides us with valuable lessons on how economic policies affect the value of money and market behavior. Moreover, history teaches us that volatility is a constant in financial markets. So, when confronted with economic challenges like what we are seeing now, it's imperative that we stay calm and seek lessons from the past to make informed financial decisions. Knowledge of the past serves as a beacon that can guide us through the turbulent waters of markets and currencies. Therefore, do not underestimate the value of studying financial history to understand current events and position yourself wisely in the world of investments. 3. Types of wars and nationalism. Dalio identifies 5 types of wars: trade, technology, geopolitical influence, capital, and military, and notes that these conflicts can lead countries toward self-sufficiency and nationalism, reducing globalization. It is crucial, my dear viewer, that we understand the complexity of the conflicts that Ray Dalio mentions because they have profound implications for the global economic landscape. He identifies 5 types of wars: trade, technology, geopolitical influence, capital, and military. Each of these types of wars represents a distinct facet of the tensions we see in the world today. Trade wars, for example, have a direct impact on the economic relations between nations, affecting international trade and global supply chains. Furthermore, we cannot underestimate the importance of technology. Technological competition between countries is shaping the future and determining who will have an advantage in key sectors like artificial intelligence and 5G. This, in turn, has significant implications for the economy and national security. Nationalism, which arises in response to these tensions, can lead countries to seek self-sufficiency and move away from globalization. This has the potential to profoundly alter the balance of economic and political power in the world. Therefore, it is essential that we remain vigilant about these types of wars and their implications for our economy and our investment strategies. In this scenario, understanding nationalism and geopolitical dynamics is fundamental for any investor. Wars are not limited to the military field; they can manifest in various ways, affecting trade, technology, and the flow of capital. It's a complex web of challenges, and those who can grasp these dynamics will be better prepared to navigate this ever-changing world. So, let's keep our eyes open to these trends and be prepared to adjust our strategies as the global landscape evolves. 2. Impact on money and investments. The value of money is being affected by large deficits, leading to inflationary pressures. This affects various asset classes, including stocks and bonds, and encourages diversification away from debt instruments. My friend, the impact on money and investments is a matter we all must take seriously. Ray Dalio points out that we are facing massive deficits, and this is putting the value of our money in a precarious situation. When a government spends much more than it collects, it is forced to print money to cover the difference. This injection of money into the economy, in turn, creates inflationary pressures, which means your purchasing power can erode rapidly. These inflationary pressures not only affect the money in our pockets but also have significant implications for the investment market. When inflation is high, returns on debt instruments such as bonds often become less attractive as the real return, adjusted for inflation, can be negative. This can encourage investors to seek alternatives like stocks, which have historically fared better in periods of inflation. Thus, investment diversification becomes an important strategy in a scenario like this. Spreading your assets across different classes, such as stocks, bonds, real estate, and even alternative assets, can help protect your portfolio against economic uncertainties. Remember that the financial market is dynamic and can respond unpredictably to events like inflation. Therefore, staying informed and adapting your strategies is essential to safeguard and grow your wealth in a challenging economic environment. 1. Paradigm shift and stagflation. A paradigm shift is happening with high inflation, affecting how people view bonds, money, and stocks. The Federal Reserve faces a challenging dilemma between controlling inflation and not harming the economy. This dynamic may lead to a period of stagflation, and investors need to adjust their portfolios accordingly. My dear, we are witnessing a paradigm shift, and it is crucial that we understand its significance. With inflation on the rise, people are beginning to view bonds, money, and stocks differently. Traditionally, bonds were seen as safe havens, but with low interest rates and high inflation, their attractiveness diminishes. Money, which used to be a safe option, is now subject to significant purchasing power losses due to increasing inflation. This scenario puts the Federal Reserve, the central bank of the United States, in a challenging dilemma. They face the difficult task of controlling inflation without harming the economy. Raising interest rates to control inflation can slow economic growth and negatively impact the stock market, making this situation a real puzzle for policymakers. the current dynamics can lead us into a period of stagflation, in which we face the combination of economic stagnation and high inflation, something not easy to resolve. In this context, investors must adapt and re-evaluate their investment portfolios. It is crucial to consider assets with a history of strong performance in stagflation scenarios, such as stocks of resilient companies and investments in real assets like real estate and commodities. Adaptability is a valuable skill in the world of investments, and in times of paradigm shift, it becomes even more crucial to preserve and grow our wealth. Therefore, let's be prepared to adjust our strategies and make informed decisions as we navigate this challenging landscape. Friends, we've come to the end of this conversation, and I hope you've enjoyed the shared insights. If you found value in the content and feel it has added to your financial understanding, I kindly ask you to support our channel. Subscribe so you don't miss our upcoming videos and click the like button if you found the information helpful. I would love to hear your thoughts and questions in the comments as it further enriches our community. Let's continue learning and growing together. Thank you for your attention, and until next time.